Jenny, today we're going to jump into the short put strategy. Now with short puts, you have to always remember that we take on obligations. We talked about this. If I sell a call or sell a put, I have obligations to either potentially buy or sell the stock. Well, shorting a put, selling a put short gives you the obligation to potentially buy the stock. Because if the person who's long the put exercises, we could potentially get assigned, and of course that would be our obligation to buy stock at that strike price. So you can see why people sometimes use the short put strategy in place of putting in a stock order to buy at a lower price.
Okay, you're gonna have to show me how this works.
Okay.
It sounds a little bit confusing.
Let's pick a stock from there. How about Johnson & Johnson? We haven't looked at that one in a while. And as a matter of fact, let's go to the chart tab just to start off, just to get a general idea of how Johnson & Johnson is behaving. It's been in a little bit of an uptrend lately. So let's see, the stock is now trading about 141, but let's say we wanted to pick it up at a lower price, and we'll just lower our mouse down here. I'm seeing this last area here, Jenny. Now again, this is just an example, not a recommendation, but I'm just saying, what if we thought if it gets down to this level again, which is right around 137, that we'd say, okay, we'd be interested in potentially buying 100 shares there.
Why here? Just because it's at the kind of the dip of this
Again, right. Sometimes in charting or technical analysis, people will look at these points where it rallied on the last time and look at that as a potential support area.
Okay.
And again, I use the word potential. There's no guarantee, but we'll use that as our target price, about 137.
Okay.
All right, so keep in mind, that's the put we're most likely going to be selling, because that's the point where we'd be willing to buy 100 shares. So let's take us back to the trade page, Jenny, and let's go out. Let's give ourselves enough time, maybe about a month. Let's give ourselves 30 days. So we'll open up the options that expire in 30 days, which you just did. And now let's go over to the put side, which is the right side of the equation, and move your mouse down to the 137 level. Yep, there it is.
So I'm just wondering what really our strategy is here. Do we anticipate the stock going down, right, because we're buying a put, or do we anticipate it going up? Like, what position do we take here? Okay,
well, let's look good. That's a great point. The stock right now is at 140. So it's up here at 140. What we're saying is if it drops down to 137, which is where we've seen it have potentially support in the past, we'd be interested in buying some stock there.
Okay.
Now that's pretty much the approach for this. Now we're going to get a credit for selling that put. So Jenny, go ahead and click on the bid price of that put. And let's see, and it's going to create an order to sell one put. Okay, perfect. I'm going to grab the mouse, sell one put at the 137 strike. That would be where we'd be obligated to buy stock. And we're getting, I'm going to round this, Jenny, just make it $1.25.
Okay.
Now if we click confirm and send, you'll see that we're getting a credit of let's see, $125. That's our maximum profit.
Right.
All right, so we get a credit, you can see, follow my mouse, of $125 minus our commission.
Right, so $122 about is our credit.
Exactly. Okay. So after commission, that's our credit. Now, I'm going to go ahead and delete that. So we know that when we sell this put, the 137, we're going to get about $122 in our account, and we now have the obligation to buy stock. If the stock drops to 137 and it stays there or below there on expiration day.
But just the obligation, we don't necessarily have, it's just the right to sell.
Yeah, exactly. Now keep in mind, on expiration day, 30 days from now, if the stock is below 137 and we still are short that put, it will be automatically assigned and we will automatically buy 100 shares.
Gotcha, okay, that makes sense.
Okay, well that wraps up our portion on the short puts. Jenny, I look forward to our next session together.
Thanks, Scott, me too.
In this episode, we explored the short put option strategy. We then examined the mechanics of short puts and their potential risks and rewards. And finally, Jenny Horn and I concluded by examining the risk profile of a short put and placing a paper money trade in Jenny's portfolio. I'm Scott Connor, and thanks for watching Virtual Trade.